Hi, everybody. Welcome back. We're on onboarding video number 5, video tours of the new enhanced BCI website. In this video number 5, we're actually going to execute our first covered call writing trade. Now, you're looking at a screenshot of the main BCI website. Before we get started into creating our portfolio and executing our first trade, I want to show you some of the products and tools that we're going to be using to accomplish this. First, you recall when we talked about our premium membership, we talked about the 4 reports of eligible option candidates, the 3 main ones for selling options. So once you become a premium member, then you could log in over here on the membership link, and that will take you directly to the member site once you enter your user and password, which I did before I started creating this video. Now, what we're going to be using in this video are the 3 reports. I selected one security from each of our recent reports and a hypothetical portfolio of $50,000. So 3 securities, $50,000. I took one security from our premium member stock report, which is published on weekends. We start producing it once the market closes on Friday. The second security comes from our ETF report, and I'll show you these very shortly, which is published midweek. And the third stock comes from our Dow 30 or blue chip report, which is located on the resources download section of the member site. Now let's go back to the home page now. And you recall when it came to spreadsheets, I highlighted that our main spreadsheet is the trade management calculator, which is a must for everybody using these strategies. And so we're going to be using that at the end after we execute our trades, and we can have a look at our returns, our initial returns. We're also going to use the portfolio setup spreadsheet. You can kind of see a little bit of over here, which you're going to find in the store under Build Your Own Toolkit, and then go into calculators and spreadsheets. So those are the items that we're going to be using to accomplish this. And now what I want to do is take you right to the portfolio setup spreadsheet, which is not what you're looking at now. We're going to, not that one. And here we are. Okay, this one says CEO. This one doesn't have as many rows and columns as the fully expanded version, which is the one you're going to find in the store. But we're only using 3 securities, so it's a little bit easier for us to use this one. Now, we're looking at the July 2024 contracts. The expiration date is 7/19. Today's date is 6/18/24. The spreadsheet tells us 32 days to expiration. I told you we're going to assume 50,000 cash available, 3 securities, and this spreadsheet will tell us we should have set aside between 1 and 2,000 in cash reserve in case we have to execute an exit strategy where we have to buy back the option. All right, this is a guideline. It could be a little more or a little bit less, but this is a guideline. Now, once we have that, we scroll down for the initial setup. That may be our final setup, it may not be. Let's see. The 3 securities I selected was Cheesecake Factory Cake, QQQM, which is the NASDAQ 100 ETF, and Dow Chemical from the blue chip report. So stock report over here, ETF report here, blue chip report here. The spreadsheet tells us that based on 50,000 and 3 positions, we're going to allocate approximately 16,666 per position. Now we enter the price per share. The spreadsheet does the rest. It tells us that based on 16,666 and a price of 39.77, which will change a little bit when we actually buy the shares, but this is a guideline, we could buy 419 shares, and it'll round it up or down depending on if it's above or below 50. So 419 gets rounded down to 400, 84 gets rounded up to 100. 300 is just exact. So based on the rounding, we're going to buy 400 shares of cake, 100 shares of QQQM, and 300 shares of Dow, and sell the corresponding number of contracts. But let's see. We scroll down and we see based on the rounding procedure, we're spending 52,511. Well, that's 2511 too much, not to mention no cash reserve. So we have to make an adjustment. And that's why we have the right side of the spreadsheet over here for our final setup. Now, what we have to do is we have to reduce by 100 one of these. Well, we're not going to reduce QQQM because that's all we're buying is 100. It could be Dow or it could be cake. I decided to reduce cake from 400 to 300, leave QQQM at 100, leave Dow at 300, and lo and behold, now we're down to 48,534, which is well below the 50 grand we have available, and it leaves us a cash reserve of 14,666. And if we go back just as a reminder, we were hoping to get between 1 and 2,000. So we're really good to go there. All right, so now we know we want to purchase. I'm going to do the live purchasing of cake, 300 shares of cake, and then selling the option and buy to close limit order. So let's go now to the Schwab brokerage website, which is one of my brokers. And what we're going to do is we're going to enter cake, pull that up, and we have now the information on the stocks. So we want to, how many shares of cake do we want? We want to buy 300 shares. What do we want to do? Buy. I set these as market orders because usually the spreads are very small. Here the spread is 39.80 to 39.82, pretty tight spread. So let's review. We're buying 300 shares of cake at market order. It's going to be 11,946. Review the order. Okay. No commissions on stocks. Place the order. Boom. If you want, you could check the activity or go to trade, today's orders. And on the top, you could see cake was filled at 39.81. Okay. So let's go back to trade, and now we're going to go trade options because we own 300 shares. So we put in cake, and it tells us that we own 300 shares. The strategy is covered calls, right? We're selling calls. What do we want to do? We want to sell to open. We're not buying the calls, we're selling the calls. And we're leveraging our shares of cake, 300 shares. How many contracts? It's 100 shares per contract for options, so we could sell 3 contracts, right? And we're going to be doing a limit order. But first, let's go to the 7/19 expiration. We're not going to do an in the money 35.50. Why don't we do the near the money 40 call? And it tells us that the spread is $1.30 to $1.40. That's a pretty tight spread. I probably would put in a limit order at $1.32 or something, but because I don't want this video to take longer, I'm going to just put in a limit order and leave it at $1.30. Okay, it's a day order. Let's review. We're selling 3 contracts of the July 19th 40 call at $1.30, a day order only, sell to open. All right, let's review it. That's going to generate, it tells us $388 into our cash account. Let's place the order. All right, now let's go back to trade and today's orders. And let's see if it was filled. 3 contracts at $1.30, and it was filled. Okay, it was filled over here. All right, so next we want to go to, I want to show you now our trade management calculator. Now you could, oops, let me just go back, folks. I almost forgot something. That's on me. Once we filled it for $1.30, we're going to go back to trading options again. What did I almost forget? The 20% buy to close limit order. We go back to cake, and we want to do a buy to close. How many contracts? 3 contracts. What was the expiration date? 7/19. What was the strike? 40 strike. Okay. And what is the limit order? What is 20% of $1.30? Come on, you could figure it out, folks. 10% of $1.30 would be 13 cents, 20% is 26 cents. Now, this is not a day order anymore. It's good until canceled. It's buy to close, good until canceled, 3 contracts, right? So let's review the order. We want to buy to close 3 orders of the 719.40 call, 26 cents, good until canceled. Now, with 2 weeks remaining until contract expiration, I'm going to change that 20% to 10%, assuming the threshold was never reached. This protects us against share price decline. And estimated will cost us about $79.98. So we're going to place the order. Okay? And then that order should be okay, buy to close, good till cancel. There it is. All right, now it's appropriate to take us to the trade management calculator. Now you can see here, folks, I entered everything for QQQM and Dow 30. The price of cake was $39.76, and the strike price is 40. The option premium was $1.30. Now we entered everything, and let's see where we stand with our trades. Now, with the stocks, we're typically going to get a greater premium return because the implied volatility of a regular stock, not a blue chip Dow 30 per se, is going to be higher than that of the ETFs. I'm talking in general terms now, or the low risk blue chip Dow 30 stocks. And at the money will be higher than deeper out of the money or in the money. So anyway, our initial 32-day return on cake was 3.27%, and that annualizes out to over 37%. These are initial returns. The initial return for cake was 1.18%, 20% annualized, again, based on that 32-day trade. And for Dow, it's 0.93%, 10.6% annualized. But we have upside potential, particularly for Dow, okay, of 3.32%. So that can actually be a 4% 32-day return if the price of Dow moves up. Okay, so you got that upside potential. Let me scroll a little more to the right. These are our exit strategy buyback price points. That's explained in my books and videos. And then we have this section here, which is for trade adjustments. And for example, you can go to a drop down and select your exit strategy if that opportunity does in fact arise. And then you get your final results over here, post adjusted. For right now, it's just the initial trade that you'll see here, where you see the option returns of 3.27, 1.81, and 0.93. So that's before any exit strategy adjustments, and many times you won't need any. So if we scroll down on the spreadsheet below, the spreadsheet will also give you your total portfolio initial returns for these 7 contracts that we sold, where we took in $906 in cash. We had a potential of an additional $686 in cash, okay, which would give us a possible $1,592 cash for that 32-day trade. The amount of capital that we invested in this trade is $48,564. Okay, so I just had to shut the door for a second. Okay, so now the flat return was 1.87%, and the potential with upside is 3.28%. So that just gives you an idea as to the possibilities when you're using these strategies in a diversified manner, using a screening process that involves fundamental, technical, and common sense principles. So I'm taking you back now to the homepage of the Blue Collar Investor. Wow, what a video. It took way longer than I expected, but I hope that it makes it so much clearer for you how to use the various products and tools available at the Blue Collar Investor website, and how to then take that and actually start generating cash into your brokerage account. Now, we're going to have one more onboarding video as part of this 6-video series. And the next one will be the best packages, where I'll show you the advantages of combining the products into a package format where you could save a lot of money and have everything at your fingertips right away. And I'll show you a package where you can get absolutely everything BCI has to offer, with the exception of the one-on-one mentoring, should you decide that you need that. So that ends onboarding video number 5, executing our first covered call writing trade. I hope you enjoyed it, and I look forward to seeing you at the last onboarding video number 6. As always, this is Alan Hellman, the Blue Collar Investor. Take care, everybody.